If the S&P Wink with tongue sticking out 500 index falls by 20% or more at any time during the trading day, the markets will close for the remainder of the day. There are three levels of market decline. Level 1 is activated if the average falls 7%, Level 2 when the decline is 13%, and Level 3 when the decline is 20%. These halts are referred to as the circuit breakers. Once a firm piggybacks and becomes an OTC market maker, it can remain even if the firm on which it piggybacked subsequently withdraws. Transactions in 144A securities ineligible for clearing through the NSCC executed during a business day must be reported to the ORF no later than 8 p.m. Eastern Time. By contrast, trades executed pursuant to 144A in U.S. dollar-denominated debt securities that are DTCC eligible may be reported through TRACE. Open-end management companies, mutual funds, and publicly traded, closed-end funds are prohibited from buying on margin and selling short. There is no requirement that investment companies keep their portfolios diversified among industries. For round lot sales, delivery must be in denominations that add up to 100 shares or are divisible by 100 shares. New account forms may be approved by the BOM or person in charge of a small branch and affirmed by the ROP and municipal securities principals who are on site at an OSJ designated to supervise that registered branch office. The initialism OMSJ is used by the Municipal Securities Rulemaking Board, meaning Office of Municipal Supervisory Jurisdiction. Advertising for municipal securities, including municipal fund securities, may be approved by either a Series 24 or a Series 53 principal. A Series 51 principal is only permitted to approve advertising for municipal fund securities. A Series 26 principal may only approve retail communications for broker-dealers whose line of business is limited to investment company products sold by prospectus. Interest begins to accrue on the prior interest payment date and accrues up to, but not including, the settlement date. Regular way settlement for a trade executed on Friday, May 19th, is Tuesday, May 23rd. The computation is 30 days, March, plus 30 days, April, plus 22 days, May, equals 82 days, total. For corporate and municipal bonds, every month has 30 interest days. Retail communication regarding DPPs, investment companies, and derivatives must be filed with FINRA within 10 business days of first use, post-filing. Payments to sponsors of mutual funds must be made within 3 business days of trade date or within 1 business day of receipt from the customer, whichever is later. According to SEC Rule 104, stabilizing bids may only be made for fixed price offerings underwritten on a firm commitment basis. An at-the-market offering is one in which new shares are sold into an existing trading market at other than a fixed price. Therefore, the price for the new issue is the current, ever-changing market price. Options communications distributed prior to customers receiving the options disclosure document or prospectus must be filed with FINRA's Advertising Regulation Department by member firms at least 10 calendar days prior to first use. Mutual fund communications must be filed within 10 days of first use if the filer is an established firm. Under the SEC's net capital rule, market makers have a minimum requirement based on the number of markets made. For stocks with a bid price of more than $5, firms must have capital of $2,500 per security. For stocks with a bid price of $5 or less per share, firms must have capital of $1,000 per security. Based on market making alone, the rock bottom minimum is $100,000 with a ceiling of $1 million. The formula is 110 times $2,500 equals $275,000. 40 times $1,000 equals $40,000. Minimum requirement equals $315,000. Certain accounts are not covered in an SIPC liquidation, including accounts of officers or partners of the failed firm, persons who own 5% or more of the equity of the failed firm, and other members with proprietary accounts maintained at the failed firm. If another member maintained a fully disclosed account, K2I, at the failed firm, the account would be covered because the securities held in the account are customer securities. Preferenced orders are sent to a specific market participant that is at the inside market. These orders first access displayed size and then reserve size of the preferenced firm. If the recipient is not at the inside market, the order will be sent back to the entering party. Only member firms can be part of an underwriting group offering non-exempt securities. A member can join with a non-member in underwriting exempt securities such as municipal bonds. In addition, underwritings outside the United States are not regulated by FINRA. While FINRA sets the ground rules for sales charges and pricing, the fund itself, through its managing underwriter, sets the actual breakpoints. During its first year of business, a broker-dealer's ratio of aggregate indebtedness to net capital must not exceed 8-1. An established broker-dealer's AI to NC ratio may be as high as 15-1. Early warning provisions of the rule require reporting when the AI NC exceeds 12:1. If the NC falls below 120% of the required minimum net capital, an early warning report must be filed. SEC Rule 17A11 is one of the few rules that should be remembered by number. In a dominated and controlled market, the prevailing price for markups is based on cost, not quotations. Quarterly reports, 10Q, to the SEC are not audited, but annual reports, 10K, must be audited. Most publicly traded companies are subject to these reporting requirements under the SEC Act of 1934. For a primary residence to be excluded from the definition of branch office, the associated person may not meet with clients at this location. According to the firm quote rule, market makers are obligated to execute orders at a price at least as favorable as their published quote, for an amount up to their published size. Mutual fund shares are valued daily after the exchanges have closed. A customer's purchase of mutual fund shares is executed at the next price computed after receipt of the order by the customer's broker-dealer. This practice is known as forward pricing. Similarly, when a mutual fund shareholder redeems shares of the fund, they are bought back by the issuer at the next price computed after receipt of the order for redemption. An OSJ is defined as any office where one or more of the following functions take place: order execution and/or market making, structuring of public offerings or private placements, maintaining custody of customer funds or securities, review and endorsement of customer orders, and final approval of retail communications. If the beneficial owner of street name stock returns a signed proxy statement but fails to indicate how the shares are to be voted, the member must vote the shares as recommended by management of the issuer.